Hello and welcome to Speedy Finance. In today's video, I'll be discussing whether there'll be a stock market crash in 2025. So the short answer to that question is nobody knows. For every person who thinks the stock market will fall 30%, somebody else thinks the stock market will rise 30%. Opinions are cheap, everybody has one. In reality, nobody knows what's going to happen today, this week, this month. If we all had crystal balls, we'd all be billionaires by now. But that's not how it works. So in today's video, I'll discuss why some people are panicking and think there might be a crash in 2025. And I'll discuss how you should behave and how you should invest if there is a stock market crash. So let's get into it. So this graph just shows how the S&P 500 has performed the last 5 days. And you can see that it's fallen 4%, which is a significant drop. And this already has a lot of people panicking. So you have to remember that people act like sheep. So when the market starts falling, people start selling. When the market starts rising, people start buying. We saw this during the COVID scamdemic where people panicked. People just sold their positions. The market dropped very quickly. And then in 2021, the market went back up again. The reality is though, it's impossible to know what's going to happen tomorrow, this week, this month. So although the market's dropped 4% in the past week, it could easily go up 4% next week. So if you sold, let's say you sold today, but then the market went back up 4%, if you were to buy back in at that point, you've just lost a load of money. So the reality is, because none of us have a crystal ball, we don't know where the bottom is and we don't know where the top is. Trying to time the market is a fool's game. The reality is you're better off just to stay invested. My personal advice would be to continue investing as you have done previously. Whether the market is up or the market is down, you continue to invest. So I always recommend a dollar cost averaging approach, whereby let's say you've decided that you can afford to invest $1,000 a month. You continue to invest that $1,000 a month, whether the market is up or the market is down. Timing the market beats timing the market all of the time. People who try to jump in and out of the market and try and time the market will just make way less money over a long period of time than people who stay invested. We know how the stock market behaves over the long run. So the S&P 500 has averaged a 10% return with dividends reinvested over the long run. And that's what you've got to keep in mind when the markets are moving around. So to illustrate this point, I've just zoomed out a little bit. So we're looking at the past 5 years, how the S&P 500 has performed over the past 5 years. And you can see this is dated February the 27th, 2025. It's basically doubled in the past 5 years. So any money you had invested has doubled in that time period. And that's excluding dividends being reinvested. So for myself and many others who've been invested in this time frame, it's been a great period. You've had great returns. However, if you look in more detail, there are plenty of periods in the past 5 years where the market has been on the decline. So at the beginning of that period, you can see that's still from during the COVID scamdemic where the market dropped a lot. Then in 2021, obviously the market increased significantly. In 2022, there was a market downturn. I guess you could call it a correction where the market decreased. And in the past 2 years, 2 and a bit years, the market has performed incredibly. We've had great returns. So anybody who's been invested for this period of time has had great returns. However, if you tried to time this market, you would have made significantly worse returns. So let's say in 2020 you tried to sell. The reality is you didn't know where the bottom of the market was. So let's say you sold in Feb 2020. At what point would you have bought back in? It's impossible to know where to buy, where to sell. So the most important thing is to just stay invested. Keep dollar cost averaging, and over the long run you should make money. Obviously, past performance is not an indicator of future performance. However, we know over the long term, the S&P 500 has increased. So the best approach is to simply dollar cost average into the market. If you enjoyed this video, please give it a thumbs up, subscribe to the channel, and I'll catch you in the next one. Thanks for watching.